I think what I'd like to do is sort of take the agenda a little bit further away from what Margot and the wonderfully named Guru. I mean, if there's any name that I'd like to give my kids or my grandkids, it is Guru, actually. I mean, what? Unbelievable. I think you drop the duff and you just stick with the Guru. Anyway, apologies that this is a Mexican image, but our latest annual report used the wonderful work of Diego Rivera, who's a very famous Mexican artist. And I put this up just to remind you, you may not know who WPP is, but here in Brazil, for example, we're the largest advertising and marketing services company in the world. Here in Brazil, we're number one with Young and Rubicam, with Ogilvy. Margot mentioned the Dove campaign. That is a campaign that came out of Ogilvy São Paulo. Ogilvy was the network of the year last year at Cannes and this year at Cannes. We were the holding company of the year last year at Cannes and this year at Cannes. And Ogilvy in São Paulo was the agency of the year last year. So we're well known here in Brazil for owning Young and Rubicam, the largest agency here, Ogilvy the second largest, JWT the fourth largest. We have a very significant interest in Ibope, the research company owned by the Montenegro family. We own 42.5% of that company and a number of others. So I put this up because these are our brands. We actually have got about 15 verticals in our company. And as Carlos Brito and others mercilessly advertise their companies, I'm going to advertise WPP a little bit. But let me just sort of focus on one number. So remember 75 billion of billings, okay? The worldwide advertising industry is about $1 trillion in size. 500 billion in traditional and 500 billion in non-traditional. That 75 billion is the media flow through our business throughout the world. Here in Brazil, we invest about $1 billion with Globo every year. Our total billings in Brazil are about 2 billion. With Google, I don't think they'll get upset with me if I say our relationship with Google, out of the 75 billion, last year was 2.5 billion. Here in Brazil, it was 100 million. So we invest about, on behalf of our clients, about 10% of the budget that we invest in Globo in Google. But I have to say that the Google relationship, and this is something I'll come back to you, has multiplied enormously. So the previous year, our investment in Google was about 60 million. It was over 100 last year. This year, we're targeting 170, 175 million. You would not see that growth elsewhere. And Google has become our biggest media investment worldwide, along with News Corp. Rupert Murdoch, to me, is the only really worldwide, global media. News Corp and 21st Century Fox is really the only global company in my view. Other companies are trying to be global. I'm talking about traditional media owners, not the new media owners like Google. Google is not a technology company. It's a media owner. In fact, very interestingly, the place I was meant to be in this week, instead of being here, was Sun Valley. And at Sun Valley, the rumor running around, and denied by Time Warner, was that Google was going to buy Time Warner. And I mention that not to embarrass Margot, but because it's just interesting the changes that are taking place in content and the way that people think about content. So, 75 billion, just remember that just for a minute. Let me just go on here. Our market cap is 29 billion. We're a mere peanut in relation to either IBM or Google. Google is the world's most valuable company in my mind. It's about 400 billion in market cap. If you strip out the cash inside Apple, you'll get a higher enterprise value for Google. So it is, in fact, I think now, close on being the world's most powerful company. Now, just let me touch on our strategy. Not because it's an ad for WPP, but because I think it determines the thinking of most, if not all, companies, whether they be domestic companies here in Brazil, regional companies in Latin America, or worldwide. And we have 4 strategic objectives. Our strategy might be wrong, but it's very simple. And it could be expressed in one sentence: fast growth markets, digital, data investment management, and horizontality. Let me just explain quickly. Fast growth markets are basically the markets of Asia, Latin America, Africa, and the Middle East, and Central Eastern Europe. Remember that I mentioned Africa. Andre was a little bit sort of, not forthright and strong over Africa in the first session, if you remember the question about Africa. We're very strong on Africa, and I'll come back to that in a second. In fact, this morning we announced a further acquisition in Africa to broaden our network there, and we have the most powerful network in the advertising business in that region. So fast growth markets at 31%, we want them to be 40 to 45%. That's of our revenues. Our revenues, remember, including associates, are about $21 billion. Digital is 36% of our business. In the year 2000, virtually non-existent. Today, 36%. We want it to be 40 to 45%. Data investment management, research, the sort of things that we do here in Brazil and in Latin America with Ibope, television audience measurement, custom research, panel research with Kantar World Panel, Taylor Nelson Sofres, Millward Brown, are about 25% of our business. That's about right. And horizontality is very simple. It's getting our 178,000 people in 110 countries to work together. So that's the background. Now, very quickly, and I'll try and get through my allotted time so we can have the panel discussion, I've got 10 things to say to you. The first is, there may be Americans in the audience, and I apologize, this is not meant as an aggressive comment. Most Americans, I think quite rightly, think that the center of the world is New York. New York will continue to be a very, very important center of the world, but the balance of power in the world is changing. And it's changing in 3 ways. Most commonly, people talk about East, meaning China and India. Don't forget Indonesia. Don't forget Pakistan. 185 million people in Pakistan. Very, very young age profile, not dissimilar to the age profile that Carlos Brito showed for Brazil. But note on Brazil that we're coming to the peak of the young. Note that in Carlos's slide, there was a degradation, a lowering of the people under 14 and an increase in the people over 65 when you got out to about 2020, 2025. Pakistan's the same, and I'll come back to that in a second. But it's to the east, it's to the south, which is where we are, in Brazil, in Mexico, in Argentina, in Colombia, in Peru, those being the 5 markets that we see the strongest growth. And to the southeast, that's why I think Africa is high up on the agenda, to Africa and the Middle East, despite all the challenges that there are in the Middle East. So that's number 1. Number 2, we often think that demand and production are balanced. Demand, basically around the world, is less than productive capacity. Our biggest client is Ford Motor Company. Ford Motor Company was one of the big 3 in Detroit that was challenged by the Lehman recession. And in 2008, 2 of the world's largest automobile manufacturers went to the government for money, Chrysler and General Motors. Ford did not. And in that year, production was about 80 million units of cars and trucks. Demand was about 60 million. The position has not changed today. Today, the world can produce about 80 million cars and trucks. And the demand is still around 60 million. But the pattern has changed dramatically. Whilst capacity being squeezed in the West, particularly in the US and Western Europe, where it's been expanded is in Japan, South Korea, India, and of course China. So the balance of production has shifted, but the fundamental principle is that differentiation is essential, either tangibly or intangibly, which is what we do, because production still exceeds demand. And that is true in most categories in which we deal in. The shortage, however, and this was alluded to in the first session with Carlos Brito and Andres Esteve, the shortage is in talent. If you think there is a war for talent today, just wait, because that slide that Carlos Brito showed, and he said that led to premiumization and the growth of the lower middle class and middle class in Brazil and indeed other markets. That war for talent, which is extreme at the moment, that nature of the population is going to change. With the growth of city dwelling, we work very closely with IBM on the Smarter Planet, Smarter Cities campaign. 50% of the world's population live in cities now. It will be 70%. Family sizes are declining, as I think was mentioned in the earlier sessions. The rise of women, thank goodness, in the working population means that families, in terms of birth rate and size, will inevitably get smaller. Congestion will get more as people move into cities. All this means that the supply of talent, and I'll come back to it in a minute, is going to get less. So the war for talent is not an issue. Very interesting that Carlos Brito said people are a key differentiator for his business in relation to a bank like BTG Pactual, where it's exactly the same. The same thing is true with us. The quality of our people, our ability to find, keep, incentivize, and motivate people is critically important. So that's the second thing. The third thing is this, it's an ugly word, but this word disintermediation. If you actually said to me, what do I think Google is about? What do I think Larry Page and Sergey Brin, and what do I think Mark Zuckerberg at Facebook are about? At their heart, I think they're in the disintermediation business. That means that they are seeking to change the pattern of manufacturing and distribution in multiple sectors such that you and I as consumers actually can buy goods and services at cheaper prices. In fact, what they do is they disintermediate the supply chain. And there are three things that are happening. One is that these new businesses are rising, they disintermediate traditional businesses. They disintermediate traditional businesses and are judged on different criteria, not on the criteria that traditional businesses are judged on, that is, operating profits, margins, after-tax profitability, earnings per share, but often on very different criteria. And last but not least, moving back to the talent point, they are very attractive destinations for young people coming out of design schools or art schools or engineering schools. They are a magnet for talent. Young people prefer to work in smaller, more responsive, more networked, more technological firms. So the era of apprenticeship inside large corporations has largely gone. The fourth thing that we see happening in the world, all these 10 trends we see happening amongst our clients. Just to remind you, largest client is Ford, second largest client is Unilever, third largest client is Procter & Gamble, fourth largest client is Nestle, goes through the sort of fortune, of the Fortune 500, I think we work now with 345, I think it is, of the Fortune 500. Here in Brazil, we work with all the large Brazilian domestic companies, media companies, automobile companies, whatever, FMCG companies, and of course regional companies as well. So this is the fourth thing we see going on. For the last 20 years, the retailers have had more power than the manufacturers. By and large, Carrefour, Tesco, Walmart have had control of the point of purchase. From the last few years, and Google and indeed IBM and other technology companies are changing that balance. And of course, the two most obvious examples of the change of that balance are Amazon and Alibaba. I just remind you that Alibaba will come to the American market, will be IPO'd on the NYSE shortly at a valuation that is supposed to be around $185 billion. Probably will go north of that in my view. 200 billion I think will easily be achieved. But what's happening is two things. Firstly, manufacturers for the first time can establish direct relationships with you and me as consumers. Secondly, the rise of e-commerce, actually most epitomized by Amazon or Alibaba, the rise of e-commerce means that direct relationship can be fulfilled. So the retailer, which acted as a block in a way between manufacturer and consumer, is now being end run by e-commerce and by the growth of these e-commerce sites and the direct relationship. Now, coming back to the smarter cities concept and smarter planet concept, this is really important. What's also happening is we're becoming more city dwellers. As I said, the projection is that 70% of the world's population will be in cities. China today, 50% of their 1.3 billion people live in cities. They're already there. The world as a whole is already there at 50%. It will be 70%. Thinking about what that means in terms of congestion and thinking about two-earner families, again, the rise of women and smaller families, what it means is that people are going to be looking more for convenience retailing. So you will have proximity retailing, i.e. physical sites which are located closer to people living in cities, and you will have e-commerce. So it's changing the pattern and the nature of the relationships. The fifth point that we see is that those of you that run companies, I think the biggest challenge that chairmen and CEOs face is not external communication, it's internal communication. It's getting people inside companies to know, to understand strategic and structural change. And what, in the case of WPP, which is a company that started 28 years ago from zero, today we're 29 billion of market cap, 178,000 people in 110 countries. The biggest challenge for me, because we've grown significantly by acquisition, is communicating the strategic and structural change that we see. That is the biggest issue inside client companies we deal with, and indeed our own company. I'm sure that nobody in this room, including Google, IBM, it doesn't include ourselves, are exceptions to this rule. But I have to assure you that the ability of companies to avoid the strategic direction that chairmen and CEOs set out for the companies is amazing. And the biggest problems that we see in companies is the lack of alignment to the strategic objective. So this internal communications area is critically important. Now, at the same time as we see that, we see major changes taking place in the way that companies are organized. It used to be the case, I think, that we had global, regional, and local pretty much equally balanced. What we're starting to see now in a number of major instances, and the thing that we've written in our annual report for the last 8, 9, or 10 years, is that the global focus is becoming more and more important. Companies are becoming more agile at the center, more networked at the center, but they're also becoming more powerful at the center. The same thing is happening at the local level. So, for example, Coca-Cola operates in 220 countries. We operate in 110. Twice the number. Coca-Cola operates in twice the number that we do. It's obviously impossible if you're sitting in Atlanta or if you're sitting like we sit in London or New York to know what goes on in every one of those 110 or 220 countries. So what we see is more global emphasis, more local emphasis, and if anything, regional management being taken out. I was at a Microsoft CEOs conference in Seattle a few weeks ago, and Jeff Immelt talked about how GE, for example, was becoming much more global and much more agile and much more responsive, much more local, and taking out regional management because they were the block between what came down from the center and what came up from the countries. They had the ability to say no, but not the power to say yes. And what's really interesting is if you take the BRICS, that's Brazil, Russia, India, and China, out of their relative regions, you immediately solve the problem. And I think it is, and I'm going to use the word ludicrous, and I think it is ludicrous, for any company to operate with country management where you have a country manager for Russia with 7 or 9 time zones, a country manager for China with 1.3 billion or 1.4 billion people, a country manager for India with 1.2 billion, for Brazil with 200 million, and you treat them exactly the same as you would do Portugal or Greece. No offense to any Portuguese in the audience or any Greeks in the audience, but it's the structure is wrong. So taking out the four bricks and making them direct reports to the center sort of solidifies that structure. I'm disappointed that Carlos is not here because this point, I think, is a really fundamental one. Since 2008, we have seen a growing emphasis, more and more emphasis, on the cost side of the equation with our clients. Because worldwide GDP growth is bumping along at the moment at around 5% nominal, about 3.5% real, and is sub-trend, meaning it is below the levels that we saw pre-Lehman, companies are finding it difficult to generate the top-line growth that they need, even in the fast-growth markets. The fast-growth markets have slowed. The BRICS, the next 11, as Jim O'Neill at ex-Goldman Sachs called them, we worked on that thesis of BRICS and next 11 together, those markets have slowed. They're still faster growth than the mature markets, but they've slowed. And what that's doing is placing greater emphasis on cost. I'll give you an example. The FTSE 100, that's the 100 largest companies in the UK by market cap, of which we're number 31, half of the CEOs of those companies are ex-chief financial officers. So the focus on cost, we think, and you would say, well, he would say that, wouldn't he? Because it's, talking up his own purpose, and I am. But this focus on cost means that there is decreasing focus on the top line. And the simple fact is that you can only succeed if you grow your sales. There's a finite limit to what you can do on cost until, of course, on the top line, and you get to 100% market share. So, key issue. Government is the next issue that we see. Ever since Lehman, government has been much more involved in the economy of most countries. Not just as a regulator, not just as an investor, but a stimulator as well. If you look back to the nearest precedent for Lehman, which would be the 1929 Great Depression in the US and the Western world, government didn't get out of the way until World War II. In our view, government will continue to be a big stimulator of economic activity and will continue to be so. So the role of government, the thinking of businesses, GE, for example, another good example in the case of GE, for the first time created somebody to look at their government business across the whole enterprise about 4 or 5 years ago. It was after Lehman they started to think about how important the government will be. The government, in our view, is here to stay. And the mixed capitalist model, a model that sort of, in a way, equates more to the Chinese model than it does to the historic capitalist model, is, in our view, becoming more and more important. The ninth point, and this is the ninth and 10th point, is sustainability. If I was here 5 or 10 years ago, I think there would be a lot of greenwashing going on amongst our clients, or some greenwashing. Today, not one of our clients does not put sustainability and corporate social responsibility at the heart of what they do. And we over-intellectualize this stuff. Doing good is basically good business. If you're in business for the long term, if you're building products and services for the long term, you will embrace sustainability. And the last area is consolidation. In our own industry, we've seen some successful consolidation, some unsuccessful consolidation. But what's really interesting about what's going on is because of that sub-trend growth, because of that focus on cost, consolidation, in our view, will continue. Not just amongst clients, not just amongst media owners, but also amongst agencies as well. And I just finish by saying there's a new type of consolidation going on. There is a rise of longer-term private wealth and private wealth funds, epitomized actually by, here in Brazil, 3G, Jorge Lehmann, now I think the richest man in Brazil after the fall of Ike Batista. 3G, Benkiza. Benkiza, for example, the Benkiza family backing Douwe Egberts and Master Blenders. These are new companies where they capitalize on low-cost long-term finance, 30-year money, strong management, like the Brazilian 3G management, which Warren Buffett says publicly is probably the best management in the world. Again, Brazilian by origin. And lastly, utilities or staples. Remember that 3G bought Burger King and then bought Heinz. Heinz is in the baked beans and tomato ketchup business. You can't get much more utilitarian than that. But what I'm saying is that what you're seeing is a new type of consolidation, very cost-focused, very utility-driven in FMCGs, fast-moving consumer goods, and funded by long-term capital. There's another set of examples that are growing at the moment as well in the pharmaceutical industry. Valiant, a Canadian-based company with a tax rate of 5 to 10%, is also accessing long-term money, is also going after pharmaceutical companies. You'll see it's bidding for Allergan at the moment, which will double its size from 50 billion to 100 billion, but using the same principles. Strong management, long-term funding, and in their case, actually, interestingly, going after research and development spending. So consolidation is going to continue for a long time. That's a summary of the 10 trends. That's what we see going on inside the companies, and I hope that's been of some interest. Thank you.
Bom, eu queria agradecer. I'd like to thank you, all of you, with the strong and sound thanks for the immense, inspiring, inspiration, and provocative also argues and topics that you raise. Unfortunately, I think we are over time at all. So it's I think everyone here it feels tired, of course. So I'd like to say thank you. We will not continue with the debate, but I would be more than glad to meet you guys and to encourage the audience also to join you for a quick conversation. Bom, gostaria então de agradecer a vocês. Eu estava explicando, eu acho que a gente teve uma manhã longa. Estamos, naturalmente são 2 da tarde, então a gente já passou muito do nosso tempo. Então eu queria agradecer a vocês pelo tempo. Eu espero que vocês tenham gostado e eu realmente convido que nós tenhamos agora um almoço, um momento de networking, a oportunidade de conversar com o Margot, com o Guru, com o Martin, com o Elder e agradecer a presença de todos e eu espero que a gente se veja numa próxima oportunidade. Eu queria, antes de mais nada, agradecer a equipe da Rio Negócios que fez um trabalho excepcional. Os nomes aqui eu vejo Jefferson, eu vejo Rebeca, eu vejo Kate, Tami, Juliana, Francisco, Marcelo Salim, Renato Botelho, todos esses rapazes, esses jovens que fizeram um trabalho realmente longo, cansativo, mas ao mesmo tempo muito generoso e muito gratificante para todos nós. Muito obrigado. Bom dia.